So guys, this month, earlier in July, Donald Trump signed his big, beautiful bill, his landmark bill for a lot of his policies that he wants to enforce over the next few years. Okay. And this bill permanently cuts taxes, it slashes green energy incentives, and it could explode the national debt by trillions. But does it? I guess we're going to find out in this video. Okay. Markets have already been reacting to the big, beautiful bill so far this month. Some people are saying that it's going to lead to a weaker economy, higher national debt, and therefore a weaker dollar. But in this video, we're going to talk exactly what the big beautiful bill means, specifically for crypto, but all assets in general. And we're going to talk about how this affects your bags. Okay. So we're going to talk about all that today. Now, before I do, I need to let you guys know that nothing in this video is financial advice. I'm not your financial advisor. I'm not your financial counselor. What you decide to do with your money is up to you, and you need to take responsibility for your buys and your sells. Okay, so the first thing that we're going to do is we're going to talk about what the bill is. Okay, the bill is Donald Trump's big bill that he wanted to pass, and it got passed into law on the 4th of July of 2025. Okay, now what the bill consists of, I made a little bit of a list here talking about what exactly is in the bill, and we're going to go over those right now. Okay. So the first thing we have is $4 to $4.5 trillion in tax cuts. All right, tax cuts across corporations, tax cuts across businesses, and therefore, in theory, that would trickle down to the consumer, which would make prices lower and more affordable for people. It depends on the industry whether or not that actually happens or not. But $4 to $4.5 trillion in tax cuts is in effect. Okay, that's the total amount of tax cuts and tax breaks that he has given to specifically companies and corporations and businesses. Okay, so that's number one. We also have new tax deductions. All right, new tax deductions. So for those of you guys who don't know, a tax deduction is when you file your taxes, you can write off things to deduct your tax bill each year. Okay, so Donald Trump has new tax deductions. Some of those include no taxes on tips. So for those of you guys who are gig workers where you guys work on tips, maybe you're a waiter, you're a waitress, you are, some sort of gig worker where you get a lot of tips. Maybe you're an Uber driver, whatever the case may be. There are no taxes on tips anymore. Okay. I'm not sure if there's a limit to that, but I do believe that for people who make money on tips, a lot of people, there's going to be a lot of tax breaks on tips, and that's going to be more money in your pocket at the end of the year when it comes to tax season. Okay. No tax on overtime up to $25,000. All right. So if you guys work a lot of overtime, if you guys are, you guys work a lot of overtime at your job or whatever the case may be, up to $25,000 per year, you get a tax deduction for each of those hours that you work of overtime. Once that overtime rate hits above $25,000, then what's going to happen is a portion of that tax, whatever you get taxed, is going to come back to you at the end of the tax year. Okay, like I said, not financial advice, but that's what I understand about this bill, and that's what it means. All right. So we have deductions for state and local taxes as well, lifted to $40,000. All right. So those are also, so basically people who file state and local taxes, they have tax deductibles. That's been increased from up to $40,000. All right. Trump accounts for newborns. Now, this is a big debate for a lot of people. Some people, obviously, this isn't a political channel. We're not going to talk about, whether or not this bill is good or bad or moral or not moral or whatever the case may be. But one of the big policies of the big beautiful bill is that for each newborn that is born upcoming, they're going to receive $1,000 in stimulus that's going to be put into a stock index. Okay. So if you have a kid or you have multiple kids that are going to be born, Donald Trump is creating a policy by the government to create essentially a Trump account for them. And then that Trump account is going to give them a stimulus check of $1,000 that is invested into the stocks. So let's say it's the S&P 500. Your newborn is going to have $1,000 into stocks. Okay. Now, in theory, you would think that this would allow the stock market to go up, but this actually is going to be a tax on everybody, the working people, because what's going to end up happening is that when the newborns get born, then what does that mean? The Trump accounts are not as a result of production, goods and services. They're going to most likely print the money, and then what's going to happen is then people are going to get hit with an inflation tax, and people who own assets will get wealthier, and people who hold dollars and government currency will get more poor, just like this channel, I say on this channel a lot, okay? So the Trump accounts for newborns. Every newborn that's born gets a Trump account of $1,000, all right? And that $1,000 is then put into the stock market to help prop it up. Now the result of that will be also inflation, okay? Now budget cuts. Looks like there's budget cuts in Medicaid, food stamps, green energy credits, all right? So the whole green energy incentives that the Democrats were pulling earlier on, that is no longer, Donald Trump is cutting the federal budget for those things, okay? So Medicaid, food stamps, and green energy, all right? So in terms of the deficit, what this is going to impact, in total, it's estimated that it's going to increase the deficit by anywhere from $3.3 to $5 trillion in 10 years, okay? Now, what a lot of people don't realize is that, because the question that you have to ask yourself with these bills, you guys, is that where are they going to get the money? All right. The money usually, because the government doesn't operate at a profit, it operates at a deficit. What usually happens is the government prints money in order to make the difference of these things. And then with that difference, that explodes the deficit of the United States government. And then as a result of that, when all those bonds become refinanced, they're going to have to print money, which causes inflation, which makes everything more unaffordable for all of you. Okay. And me. All right. So everybody, people who own assets benefit from inflation, and people who hold dollars and who have savings get destroyed. Their purchasing power gets destroyed over time. Okay, so this is going to impact the deficit by about 3.3 to 5 trillion dollars in total. It's estimated. Okay. Now, what a lot of people don't talk about is that obviously I don't like tariffs. I've made content about that for you guys who have been following my channel for a little bit of time. All right. I don't like tariffs. It's going to lead to higher prices. It hasn't led to higher prices yet because there's a lag effect in the macro economy. So anywhere from 6 to 12 months, we should probably see the tariffs, if they're actually enforced, to start to affect the goods that are tariffed. We're going to end up paying those prices because the corporations are not going to eat that margin. Those margins are going to go to the consumer. Okay. So that's one thing that's important. Now, the other side of tariffs is that it's going to result in a lot of revenue for the United States government. So the United States government, I think the tariffs estimated, I think it was about $300 billion in revenue estimated per year. So if you do 300 billion and you multiply that by 10, because that's what this estimated deficit is. So if you do 300 billion times 10, that's 3 trillion. This bill is going to equal anywhere from 3.3 to 5 trillion dollars increase in debt in the government deficit. So if you think about it, let's just say it's on the lower end, 3.3. The tariffs are going to bring in an extra 3 trillion in 10 years. So that kind of levels itself out. But if it's more than that, it's going to result in a higher deficit. Now, the one thing that we do need to talk about, you guys, is that this will lead to inflation unequivocally. Okay, no matter what the government does, it's going to result in inflation. And for people who own assets, obviously this is a crypto channel. For people who own assets, inflation actually helps you and makes you more wealthy. All right. So if you own Bitcoin, if you own a lot of Bitcoin, if you own real estate, if you own stocks, if you own the stock market, typically what that means is that your purchasing power either increases or remains the same as inflation gets worse and worse and worse. Okay. So that's a big lesson here with all these policies. These policies are going to lead to inflation. It doesn't matter what politician is in office. Inflation is happening regardless. These problems that the government is facing with money printing and increasing the deficit started a lot longer than any of them were in office. Okay. The question is what does the printed money go to? That's the main difference between the Republicans and the Democrats. All right. So the next thing that we need to talk about is why macro matters for crypto. Okay. So the first thing that we need to talk about is if there are larger deficits, that leads to a weaker dollar, which means higher inflation, which means money printing, which means assets go up, like I just said earlier on. Okay. Crypto does typically go up as inflation goes up. Okay. As inflation gets worse and worse and worse and becomes more of a problem, that results in a weaker dollar around the world. All right. And this is exactly why we've seen Bitcoin go up as high as it has, all the crypto assets go up as high as it has over the past 10 to 15 years, because inflation has become more and more of a problem for people, and crypto goes up as inflation increases because people are looking for alternative places, alternative liquid places, more importantly, to park your capital. All right. A lot of people, a few of you guys have asked me about real estate. I think real estate's a fantastic investment, but it's not liquid money. All right. The thing that you guys have to understand about crypto is that it's more liquid. It's even more liquid than dollars. All right. You can buy and sell crypto instantly. You can turn crypto into dollars whenever you want. You could sell it and buy it and sell it 24/7, something that stocks can't do. All right. Unless you're using tokenized stocks, which is a thing now. All right. If you guys use tokenized stocks, you guys can trade those 24/7. But the crypto assets that you buy, you guys, they're liquid, so you can buy them and sell them. If you guys have a real estate property that you guys want to buy and sell, that's a solid asset, and you need a buyer in order to make a profit on that. You can't sell it instantly until real estate gets tokenized as well, and there's an open market for that where you can earn fractionalized shares of a property. But until that happens, you guys need to buy and sell a whole property, and that there's a problem with liquidity in there, in that not that many people, market participants, have the money to be able to buy a property upright. Okay, so that's the thing about crypto, is that it's liquid. So there needs to be an alternative to the liquid dollar. All right, the liquid dollar needs a replacement, and people are looking elsewhere for that. And Bitcoin and the crypto market is exactly where people are looking. So as inflation goes up, as the deficits explode, typically we see assets like crypto and hedges against the dollar and the hedges against inflation increase in price. All right. So as we can see, the other thing that we need to talk about here is that as the dollar goes weaker and weaker and weaker, typically what we see in the broader macro investing landscape in general is that we enter what's called a risk-on environment. As money increases, as money gets printed, we start to see people take on higher and higher risk in order to make out for that inflation. So what is considered high risk? Well, it depends on who you ask. If you ask a financial advisor will tell you that, equities, stocks are high risk, right? Equities are high risk. If you ask average people, a lot of people treat crypto as high risk. They say it's too volatile, it's unpredictable, which a lot of those guys just don't, although part of what they're saying is true, a lot of those guys don't actually understand what they're looking at, and they don't really have a rhythm in the crypto market yet. All right. But regardless of that, crypto is considered a risk-on investment by the majority of people because it's very misunderstood. Now, Bitcoin is actually a risk-off investment, but that's a topic for another video. All right. So as a result of these tax cuts, as a result of these stimulus flows, people are going to have extra money and extra dollars. What are those dollars going to go into? They're going to go into risk-on assets such as the crypto market. Okay. So the crypto-specific fallout of the Big Beautiful Bill. All right, let's talk about that. So there are no crypto-specific tax cuts that were made into the bill. Okay. One thing that people who are in crypto, what we were hoping for is that, similar to the dot-com bubble, maybe we could have seen some crypto-specific laws that incentivize people to come in to the United States. That would have been really nice to see, but we didn't end up getting that. All right. But nothing crypto-specific was in the bill. Uncertainty reasons, so small payments are still taxed technically. All right, there is a lot of question marks in terms of how crypto will be adopted in the United States for payments and things like this, not just as an asset. All right, there's a lot of things that still need to be established for the crypto market. So what type of things am I talking about? Let's say I use crypto to pay for something that's $2. Do I have to pay capital gains on that $2 item that I bought, or was that a payment? Because would it be sales tax? What would it be? Would you have to pay capital gains and sales tax? These things need to be more established in the crypto market, because there's a difference between payments, crypto for payments, and crypto for stores of value. Bitcoin is a store of value. In order for you to use it for payments, you'd have to use the Lightning Network and things like this. Okay. So uncertainty remains. The other thing that I wanted to talk to you guys about is that government spending and inflation will outweigh this uncertainty. So it's not that this uncertainty will lead to the crypto market not going up. It just means that there's going to be another separate bill that's likely going to need to be put into place in order to solve some of these crypto specific issues that the government needs to clarify up. Okay. And Donald Trump, as you guys can see, he's very bullish on crypto. He wants crypto to do very well, and he's going to continue to make crypto friendly laws so that innovation stays in America and doesn't go elsewhere around the world, right? So the thing that we need to understand is that a standalone crypto tax bill is needed. Inflation is a high risk for people who don't own assets. Okay, maybe I'm going to make another video about this and talk to you guys about inflation benefiting people who own assets and inflation killing people who don't own assets and don't have the balls to invest. If you guys have been following my channel for the past couple of months, you guys know that I've been banging on the table telling you guys to get into the crypto market before we explode. I know that a lot of you guys doubted me, but look at what's going on now. Now the crypto market is exploding and things are working out for the people who took action, and for the people who aren't, you guys are writing to me now and I'm telling you not to buy, because I'm not going to tell you guys to buy green candles. You guys should have bought before when I was yelling at everybody to buy. But now that the market is up, you guys are going to have to wait for either a correction or the bottom of the next bear market. Okay, not financial advice, but you guys can do whatever you want, but you guys need to be paying attention, maybe listening to my content and learning about the market, learning about how the crypto market works. And if you follow this channel, I'm very confident that you guys are going to have an advantage over most people even in the crypto market, because although people are in the crypto market, not everybody knows what they're doing, and not everybody's been in the market enough to be able to navigate it safely and get in and get out at a safe time and an efficient time. Okay, so if you guys like this video, if you guys like this type of content, I know it's like a rant video. I went through a lot of points, more of a serious conversation, more of a political conversation. Whether you like Trump or not, it doesn't matter to me. What I wanted to do is go over some of the basics of the bill, not dive too much into the specifics, but what it means for crypto is that it's going to lead to most likely a weaker dollar. It's going to lead to a weaker dollar, not guaranteed at all. But one other thing that it's going to do is it's probably going to increase the deficit, which means that the dollar is going to weaken, which means that alternatives to the dollar, such as gold and crypto assets, are going to increase in price over the next 5 years, which I'm pretty confident about that. Obviously, there's going to be a big dip. There's going to be a bear market most likely at a certain point. But for now, what we see is we see a stronger Bitcoin. We see M2 going up and M2 increasing. Bitcoin and M2 are perfectly aligned. So I hope you guys take some action on that and learn a little bit about how the money moves so that you guys don't lose your money and you guys make some money by the end of this year, okay? YouTube, if you guys want to see more content, subscribe to the YouTube channel, like the video, save the video, share it with your friends if you guys want to see good crypto content, good quality crypto content. I know it's just me ranting in my office, but with that being said, I think that the content that I've been making for you guys is fire. The information is very good. And if you guys have been listening to me for the past couple of months and you guys listened and did everything I said, not financial advice, but you guys would have made a killing, right? All the tokens that I was talking about on my Instagram, some of my coins and picks, pretty much everything that I posted is up for the most part. I mean, there are a few exceptions of ones that have been late bloomers and haven't popped yet, but for the most part, you're really well in profit and you did better than your financial advisor has you doing. All right, so hopefully you guys like that. All right, hit the notification bell for any more of my content. All right, Instagram, Chase Your Grace, TikTok, Chase Your Grace. Let me know what you guys want to see in the comments. If you guys want me to see, or if you guys want to see anything else, let me know in the comments. Okay, thank you guys, have a good day and bless up.